Well, good afternoon, everyone. Happy Friday. Hey, it is Shooter Scott Henderson. Of course, at the end of our presentation, please review our disclosures. We are going to go over primary waves, major markets for July. Let's jump right into this. Okay, first of all, let's go over just my trader narrative. We get these biases, and my bias here is the consumer's getting a little spent. They're running out of steam. For example, oil demand dropped going into this week's close. Ultimately short supply is what really has been holding us up, not demand. We haven't had this huge demand there. And, so my feeling here, my belief or my manifestation from the things that I look at, my bias is that we could potentially roll over into July. And that happens to be seasonality as well. Now, our last cycle of seasonality was a little bit late. We were about 6 weeks late on that, but it did manifest when we got our higher low in the S&P and in the NASDAQ. So my bias is neutral. I was neutral last month, so I expect rotation to continue into the FANGs. However, we might actually see rotation out of the NASDAQ into the Dow and the Russells, because they have the most room to move to the upside in this cycle, ending or resulting in sort of a flat set of indices. More specifically in the NASDAQ, I think the SPY is doing well. Earnings were really pretty decent, but there's no reason we can't continue to do what we've been doing, just that slow, steady grind higher until we're going to give a little piece back. Now, looking at Treasuries this month, we came off just a tad bit from our prior highs. Now, the challenging part here is this is confirmed low, divergent low. So there's no reason we can't put in a third, which is one reason I have my vulture price down here at $70, because that would ultimately be where our third is if we get a 3 drive down there. Always looking for a 3 drive after a 2 because it occurs about 65% of the time. So, obviously your bias should always consider that. I still like the January 100 calls on TLT until we break below that 87.34, or maybe here at this point you wait until we get a little deeper backtest and then enter. But at this point, I do think we hold up based on where we are now. All right, looking at the dollar, I'm a little concerned that we haven't come off a little bit more. I'd rather have broken down and actually taken out that 103 or 104 at this point. And then I've got folks that I tend to respect out there who are calling for a 110 or 115 dollar. That's going to be sort of catastrophic to indices. That means we have one heck of a drawdown coming if that manifests. So we break above this 106. I think here's your sign, maybe we do want to trim indices. Now, obviously, if you've done really well, this is a good time to go over the names that you own, know what you own, and trim those that have sort of flattened or waned at this point versus what are our leaders. And our leaders really are simple. It's Apple, Microsoft, and Meta at this point. Amazon is trying to recover. So, just looking at that. But I think we do stay in this range of this 106 level on the dollar to maybe 95. So this little flat here. I see no reason that really changes. We need an event in the financial markets. I don't know that China selling U.S. Treasuries is that event, to be very candid. I have a very hard time grasping that because I'm looking at pieces. I'm not seeing the whole picture. I know that the banking regulator released its at-risk banks and put quite a number of banks in there and notified us that there's roughly $628 billion in unrealized losses in the banking sector and regional banks, etc. I'll address that a little more in the Russells when we get there. But, I don't know that that's not our catalyst. And I don't know, to be very candid, whether that's going to push the dollar or drag it. I don't have a grasp on that. So that's something that we definitely are watching. We're trying to get a visual on what might occur there. Now, the S&P, we're still just grinding higher. Had a little bit of a sell Friday, but nothing major. I mean, we couldn't even take out the lows of the candle and put in a red candle for the week. So, we've raised our target on our wave 3 to 558 from 553 last month. So we continue to see that push a little. I wouldn't be surprised if we push higher. And part of the reason is if this is wave 1, wave 3 is not usually equal. Like 80+% of the time, wave 3 is the longest wave, which would put us up here close to 600. So I'm perfectly expecting this to extend to the upside. So, like I mentioned in my notes, given these circumstances, I would only consider selling maybe 450 cash secured puts. Reason is just to bring the premium in on those. For the upside, I wouldn't even consider selling covered calls on this because there's too much of a chance we pop to the upside on some kind of news. It's just, I got that kind of feel in the market. All right, looking at the NASDAQ. Now, the NASDAQ's a little different story. Our rotation has increased. Our round trips have increased between the fangs. In other words, when we get a FOMO rally, we give it back, and we nearly give 100% back quite often on those legs for the day. So you get the morning push and it's done. And then once in a while, we get a few names that grind higher for the day, but then the next day you open up your trade station or whatever market you're looking at or tools you're using, and bam, it's already given it back in after hours. So the theme here for the NASDAQ, I think rotation occurs out of the NASDAQ potentially into the Dow and the Russells. That's sort of my thought. Maybe even a little into the S&P because the S&P is still grinding, had good earnings, et cetera, et cetera. So either our top is in on this little higher high on our weekly candle. Notice I just poked its head above. And see, this is where my work in relative strength, RSI, is significant. Notice how we had our mound look here, and then maybe we're putting in our third mound here. And notice it's a lower number in RSI. So it's squeezing to the upside. So at some point, it's going to get tighter, and when it gets really tighter, then we're going to roll over, and then we're going to come and take out our 30 in our RSI and give us a little red doohickey down here like we've gotten here. So that was our confirmed low, divergent low, and then we still came in and put one more in besides that. But if you took the 2 drive to the upside, you did pretty well. So in this scenario, I'm looking at this as drive 1 on this push, and when we get up maybe to our 3, if we do have room, then we would come off and put in our primary wave 4 around that 452. So we're looking for about $35 to the downside. Either it's in, or it waits to that 488, or it pushes a little bit. Could push up to 492 even, or it could even push up to where our 5 is, a little over 500, because that would not be. And that's sort of like a psychological number, the way that I look at things, and the market does function that way because we're like sheep. We follow the herd. So, and it's the same thing with FOMO and fear of loss. So as long as we have the fear of missing out, we're going to keep buying. As long as we have the fear of loss, we're going to keep selling. And that's how the market, unfortunately, that's it. So the thing is, when you get in your trend, stay in your trend. Now the Russells in this flat. Now coming back to the regional bank issue here, I think this is a big factor in whether or not we hold up or we break down. Now, what I've seen in the last quarter is a lot of the bearish counts just never manifest. They just haven't. And that's true in the S&P. We went to our first leg lower, didn't continue. We did that in the NASDAQ when we got a little pullback, didn't manifest the lower count. That's not unheard of, especially when you're going to break to the upside. So we could still break further to the upside if there's some kind of great news for the regional banks where we get a solution, because that may very well be what's holding us into this range. So a break above that 211.88, we actually have a shot for our highs around 250. But at this point, I think the overall finance issue for the mid-sized, smaller corporations to roll their debt going into the third quarter, I think is significant because we have a lot that rolls over, a lot more in 2025, by the way, than we have now. But it's like 70% of the debt's going to have to be rolled over by second or third quarter 2025. So it just progressively builds. So we go into a recession now, markets slow down, consumer gets spent. Obviously the downside is much more viable than the upside. Just all those factors will add to that. All right. Now, taking a look at Bitcoin, we did roll over just a tad bit. Now, the ironic thing is we got to sell for like 2,600 Bitcoin from the federal government. And then, boom, as soon as that hit, the miners sold large blocks, supposedly, so they could pay, or they had a premium due on their mining hardware. Now, we've talked about this. So it's not something we should have not expected in the miner, because that halving is a very expensive event. Having lived through 2 halving with mining rigs myself, and I physically saw a $5,000 or $6,000 machine become unprofitable. So the fact that they invested all of that capital in the new miners, and it depends on which miner you look at, I would expect some significant consolidation to start occurring, or even some hostile takeovers like Bitfarms, because they have some bonuses that other miners don't have. But looking at my hypothetical trend support that I drew up here 3 months ago or 2 months ago, and I perceived, in other words, I was doing doing a manual look because the applications couldn't see IBIT because it has no history or not enough history to see it. And I came up with, hey, a reasonable back test off of this leg one would be about 29.72. The longer we hold here, the more likely that is going to manifest. Now, the challenging part here is Bitcoin doesn't like to just give it up like a stock does and back test to the 382 or the 23.6, etc. It likes to give it back. So you typically take out the 61.8 fib, which I don't actually have it drawn on this chart to the downside. But if we draw a Fibonacci retracement tool from this low to this high, whatever your 78.6 is, if we give up this low, it's viable. Now, unless you're oversized, I would not trim here. Oversized meaning above 8%. I might consider it here, depending on what your cost, your average cost here. If my average cost is $30, I would say we open with any market weakness next week, I would probably trim. That would be my thought. And then plan to add it back $4 lower. Start buying it back at $30. That would be my thought. Obviously, if there's some capital gains issue that you may have that I'm not aware of, obviously that's you're your own captain. So that's your responsibility, not mine. There's a possibility we do roll over in Bitcoin here for a little bit and take out the lows. We've taken out my last two lower counts. If I actually pulled up a Bitcoin's future chart here, and that typically happens in threes. So I would think that it's very viable that we roll over and put in that 29.72 on IBIT. So that's what we have for this week, folks. Great trading. Until next time.